Welcome, friends. Today we will understand what is better, whether borrowing or printing money for any government. To understand this, let us go reverse direction and from beginning try to understand. In this connection, first question arises: why government need to borrow? Of course, to cover fiscal deficit. And why this fiscal deficit happens? Because there is more expenditure than revenue. So, first thing, let us understand revenue expenditure and capital expenditure of any government. So, what is revenue expenditure? Revenue expenditures are those expenditures or expenses of any government which are done for running day to day business, or we can say operation cost that are happening for that particular period or particular year. In current year, whatever expenses coming, that will come under revenue expenses like wages, salary, utility bill, like this electricity bill, water bill, etc. Maintenance cost, all this. The second type of expenditure happens to create some assets like building a hospital or road or establishing any company like Coal India, GAIL, ONGC. So these are the expenses of any government. Now, to deep dive this understanding how this capital expenditure and revenue expenditure treatment of expenditure in accounts book, revenue expenses are current year, so it comes under income statement or profit and loss account statement. Whereas capital expenditure comes under cash flow statement and balance sheet statement. In balance sheet under assets. Time span for revenue expenditure is up to 1 year, current year only. Whereas capital expenditures are for long period, more than 1 year, as it creates assets. Any creation of assets takes times, so it will be for more than year. Purpose of revenue expenditure, as earlier said, to cover operation expenses, whereas purpose of capital expenditure is to create some assets to increase earning capacity of any government and yield of revenue expenditure for that current year only, whereas yield from capital expenditure is for long period. And this revenue expenditure is occurred in same year, whereas capital expenditure occurs in many years. And another part is capitalization of expenses. Of course, capex or capital expenditure are capitalized by any government or any company, whereas opex or operation costs are not capitalized. Another difference is treatment of depreciation. Depreciation in charged in capital account of capital expenditure for any created assets, and there is no depreciation for any OPEX. Example for revenue expenditure is wages, salary, maybe this utility bills, some maintenance work. All this comes under current expenditure. Capital expenditure is of course creation of any assets like public building, hospitals, roads, any factory or companies like GAIL, ONGC, Coal India, etc. Now, second part is coming. These are the expenditures of government, both revenue expenditure and capital expenditure. Now, second thing coming is revenue or earnings of government. There are five, six types of earnings of a government, but if you will see broadly, those earnings or revenue are only from two sources. One is tax sources, another is non-tax sources. Under tax sources come in GST, goods and services tax, income tax, corporation tax. So government levies taxes on individual, corporations, and of course whatever services are done this GST. So these three sources of taxes are for government. Another non-taxes sources are like excise duties for any production done, for any manufacturing, for this. Another revenue is dividends from public sector undertakings like Coal India or any LIC or government sector entities give some dividends every year, almost every year to government. So this is also a revenue for government. Another is government provides so many services to public and corporations, so they take charge fees. So all these fees or charges are a revenue for government. Government also fines in some cases, so that is also a revenue. Another is capital receipts, like this investment happening, sale of any entities. So from there, yeah. Here, notable thing is all taxes, whether GST, IT, or income tax or corporation tax, are recurring revenues. Even dividends, excise, fees are recurring revenues. But capital receipts are non-recurring revenue. Every year, government does not disinvestment or sell their these capital assets. So this may be not intermittent, coming so many times, but will not be a recurring revenue for government. Now another question is coming, deficit. So whenever, most of the time, government expends more than their earnings. So this is a deficit, and more correctly, it is a financial deficit of of a government of India. And how this covered? This is covered through deficit financing. And there are two ways of deficit financing. One is borrowings, and second is printing of money. Now the real question coming, which one will be better to finance the deficit of government of India. Let us see first printing, the easy way. Whatever deficit, simply print and cover that one. This is not good in my view because if you are simply printing money, so it will increase flow of money in the market and this will lead to depreciation or we can say creation of inflation, artificial inflation. If extra money is supplied, then purchasing power of money will reduce and of course this inflation will increase. So if we are printing more and more money, so inflation will increase and it will hurt everyone. If our purchasing power is reducing, then it will hurt badly. And if it is alarming level increase, then any country can collapse. So this is the danger of printing more and more money. Then we can say this borrowing is good. Yes, of course, but that should be also within certain limit. If we are or any government borrowing up to certain limit, okay, that is good to finance deficit, to create capital assets. But if borrowing is increased too much, then again it is not good because this will reduce available credit or money in the market. Then corporates cannot take loan or even farmers or individuals will not be able to get loan. Even if they will get loan, interest will be more because credit is dried because government has taken more and more money, borrowed more and more money. So it is also not good to borrow too much. So what is the best way? Best way is to create some assets which creates earnings. So we should increase or government should increase more and more earning avenues and from there they can get more and more revenue for their requirement of expenditure. So it is better to create some revenue stream, especially through capex, not only from opex. So capex is better to create more and more capacity that will increase more and more earning. In limited way, borrowing is good and better than printing. So now you would have understand why financing or deficit financing is done and which option is better, simply borrowing or printing. And of course, better than these two, creation of more assets, which ultimately leads to creating more and more earnings. If you find some value in this course, please like and share with your friends and colleagues so that they can also get some benefit out of this. And please subscribe to this channel if not subscribed. Thank you.